Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap. It is Thursday, and there was a lot of action today. We started off the day with a gap down, and we tested some lower levels, some points of reference that I went over in the morning call and that I put on my charts every day. If you go on my Twitter page, you'll see that I'd say about around 8:20, I put up a chart of the spiders with different price points on it to navigate. In Redler All Access, where I write my note, I have about 30 different names with all price points on it, but that's that. So, we came in, they triggered some stops. They couldn't really get a lot of acceleration to the downside, but it was, kind of enough to then get a little bit of a squeeze into the close ahead of Yellen. Yellen speaks today at 5 o'clock, and I'm not sure exactly what she's going to say. Hopefully she sounds a tiny bit more hawkish than she did on that Thursday when she was really dovish, and the market didn't like it. Some guys said that if they raised it a quarter of a point, we would have sold off 2,000 points versus that reversal. Most institutions I follow wanted the quarter point. So I think people kind of want to hear a hawkish tone. I'm not sure what is going to happen, but you had a little bit of a squeeze, and with this type of pattern, you do take a little bit longs overnight if you if you take some risks. So anyway, let's just get to the chart patterns. Here is the SPX. You'll take a look at the chart. You'll see that here is when the channel broke. This is when the trend changed, and this is when guys started, getting short or getting out of risk. Here was your inside wedge that started to break right here, and then you had your follow through that engulfed this entire range, and then boom, boom into that flash crash, August 24th. From there, you had a small wedge type formation ahead of Yellen, and the Fed, and whether they were going to raise or not. So if you remember that week, they actually pushed hold on, let me get you a little line here. They actually pushed the envelope before with one up day, and then second up day, and then a topping tail into the Fed, which if you did get long for some type of move here, this topping tail would have gotten you out and could have gotten you short. And then since then, boom. So now you kind of have a bottom tail here. So if this is a topping tail into a bottom tail, does that mean get long? I am long a little bit. Did come in to this area and held. I guess where it was somewhat oversold, not extremely oversold. And we could still head lower, if even if you get a bounce to this 1948 or something like that, and then here's tomorrow's high. So overall, if you extend this and make it a bigger channel, okay, which is what it could be, maybe these things try and bounce a little bit, and then if you covered into here trying to be cute, thinking you could short more of a bounce, then that's cool. And if you bought a little bit in here because you sold most of your your trades there, or et cetera, and bought a little here, it's worth a try. We're traders, we have to trade. If you went home flat, that's cool too. Maybe you want to flip the coin, where if we open down, you could buy versus spot, and if it doesn't hold, you get out of the way, and if we open up, you could short versus spot, and if this doesn't get rejected here, you then have the next spot. So you don't have to have overnight risk into something like this. If you want to take a quick look at the 5-minute, I'll show you, why I did get long. If you look here, you go to the 5-minute chart of the spiders, and you will see here was you had your gap down, first rally attempt failed, and then you could have pretty much drawn this little downtrend here. This was for the morning, and right here, I actually kind of got a little lucky. I'm going to go to the spiders because that's what I was trading. So right here, I did have bids in just in case they crushed the market below 190.76. I had it in at like 190.56. I had 190 and a quarter, 189.50, 188.50, just in case you had that kind of acceleration down move, which we didn't have. So this was buy number 1. Okay, and then you had a quick move up, okay, which was a nice trade. I did sell some into that, thinking you would get some resistance at that gap. Okay, and then it came back. I was actually in physical therapy. So I'm sitting in physical therapy because I did 2 Spartan races, 3 Ironman. I'm getting old and my back hurts. So anyway, I go to physical therapy and I'm watching. I'm like, oh, I sold some strength. Saw it come back. So what I did is I bought more spiders around 190, 130 and said if it's going to be any good, it holds the low. So if you go back to the chart, if you were at work, you have to be physical therapy. That was right around here. So I figured, I bought in here, sold a little strength. I saw it go as high as 192.20, which I didn't get a sale off. In here, I'm like, I'm going to buy it versus the low. Decent risk reward, and if it's any good, I don't want to miss this potential reversal. And then that happened. And then you could have waited and, you know, also another trade here when you had your little flag. This looks like a little cup and handle, right? Here's your cup. There's your little handle. Here's your gap. So above this, if you were short, you get squeezed. And if you're looking for some type of acceleration long, you get your little follow through. So PS, that happened. So this could have been long 1, long 2, buy high, sell higher, and then hold some. Okay, now we're in the mercy of Yellen. Okay, and we'll see. You know, they were trading down a little bit after hours, so I bought a little bit more spiders. We'll see. You know, in the chat, the VTF, we trade relative strength. And early on, when the market was still making lows, Netflix was going green. Everyone's like, what's going on here with Netflix? I'm like, I don't know. It's showing relative strength. Someone's like, I'm going to short it. I'm like, why are you going to short it? It's showing relative strength. The market's making lows. This isn't. That's something you buy because if the market bounces, it could be up $6. And I was kidding, but it went up $6. But anyway, just so you can see one more time, you go to the spiders, okay? Spiders made its low. If you look here at 10:35, right here. So this is what? Look at the time on there. You have, this is actually 11:05. Let's see when Netflix made its low. Netflix opened up, made its low actually in the first 30 minutes of the day. So in the first 30 minutes of the day, Netflix made its, you know, actually the first tick of the day it made its low, came up, and then held higher. So while the spiders, okay, and the S&P were making its low, okay, because, right, if you go here, this is, you know, 10:35. Here is 11-ish. So right here you have the low, higher low. So if you go right here, which is, this is 10:40, 10:45, right around 11 o'clock, this was already on highs, and that's when the spiders made its low. So that showed you relative strength with Netflix. So here was, you know, your first move up. This was a wide range bar above the resistance and then held above it. And then I think some kind of analyst came on TV and tried to bash it, probably got some more people short. And then here was your breakout trade as the market started to lift, so did Netflix. So that was a stock to go with. It closed pretty well. The daily chart's kind of interesting. We'll see what happens here. You know, you have a big wide range bar that engulfed this little spot. So if you had to be long something overnight, the good book says take a little bit of this. You know, if you want to draw this descending channel, it's right there. And this is what's been getting rejected during this time period. So you want to make sure that if you're shorted and if it gets through this and the market wants to rally, you get out of the way. If you're in it overnight, you know, or you wanted to choose something, this is something to choose. It also held a bit higher versus the what's it called, the red dog reversal we saw, you know, a week or so ago. Another stock that has been acting well is Apple. Apple also showed relative strength, and it's getting tight, and we'll see what happens with Apple. Okay, Apple also kind of held higher. You have a bit of a wedge here. It did close above yesterday's high, right? Spiders. So this closed. Yesterday's high was 114.72. It closed at 115. That's 20 whatever cents above the prior high. You go to the spiders. Spiders closed where? Spiders closed. Let's get this out of the way here. I was drawing on it. Delete. 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 Oh, look at that. I'm learning how to use my thing. So anyway, this is where yesterday's high were in the spiders. So the spiders high yesterday was 194.57. This put a bottom tail in, you know, for the day, but below that. So did Apple show relative strength to the spiders? Yes. So if you had to be long something, thinking we might rally more, Apple's something to be long. Same thing with Facebook. That's my third thing. I took these three stocks because they've been acting best. Okay, and this held the 21-day that I put in my note and rallied off it, and now, you know, I don't know where it's going tomorrow, but we'll see if the futures are up. This should be up. Also, Tesla, best in breed too, chart-wise, in my humble opinion. You know, it broke above this spot and basically held above that spot, and now, if the market's any good, you know, this is holding above a prior descending channel. That is healthy. Above the 8-day, above the 21-day, which is what you want to see for high valuation momentum stocks. Below it, you get out of the way. Let's see what Google did today. Google, you know, not acting great, but I guess you could, you know, say this was a small red dog reversal here. At some point, if it were to break this, it would be acting better, but I'd be careful. It's very loose and wide. Amazon, you know, held the 21-day. Okay, you know, so if you sold some strength when it broke above this 532, went as high as, what is that, 543, so, you know, 11 points. Now it came back and retested and held there. Now, you know, you'll see what happens next. Oil got a little bit of a bid. Banking stocks are still weak. Let's see if Yellen's a little hawkish. Maybe the banks rally tomorrow, and that could help lift the market. We'll see. Goldman Sachs has been a disaster. Little bit of a bottom tail, but nothing to really hang your hat on. Look how below every moving average it is. This trend broke up here. And then remember this outside day right there. If you happen to be thinking you wanted to be long Goldman Sachs on this day, you got out of the way, and there was your downside follow-through. And then it never even thought about reclaiming that. So Goldman's been very, very weak, and that's not good for banking stocks. Go to JP Morgan, I'm sure it's pretty similar. What did it do today? Little green candle in the bottom end of the range. So yeah, if someone said, I want to have a little bit of the banks because maybe Yellen will be a little hawkish versus when she was very dovish right here. Look at this outside day there in the top end of the range. Led to a move to the downside. So now this little tiny bottom tail could give you a little upside, but you know, we shall see. We're not out of the woods there. The USO, what did you do today? Little green bar, no downside follow through yet. So when oil has a bid, it's hard for markets to get downside follow through, and right now it's still trying to hold this middle area. You know, it's got a lot to prove, and you know, out of the danger zone, be above there, but you know, that's a far cry from where it is now. So we'll see. Gold, some guys were pretty surprised. You know, first big move in gold in a while, first big gap in gold in a while. Here was your first gap. The guys that first saw this said, okay, first gap that didn't get filled in a while, I'm going to get long. You had to move, and then you had your viable pullback where it, you know, held the 21-day, and now look at it. You know, you do have pretty significant resistance around here, so, you know, I wouldn't be going all in gold, but, you know, there was a tradable move here, and now you'll see, you know, how it handles this gap. Does it hold above this gap, go sideways, keep the momentum for then a move to the 200-day? We shall see. Overall, it's been a very, very bearish trend, but you know, it did work its way back up, and you know, it's trying to contend with this and throwing a little power, just, you know, push through this, which gold hasn't been able to do in a while. This is you know, your double bottom that broke right here. Actually pushed a little bit above it there. Now we'll see if it can go a little bit higher there. You know, gold has been in a downtrend for multiple years, but we've also been in a bull market for multiple years. So if we're now in a bearish trend, you know, you have some vehicles to wake up that you can trade also when the complexion changes, but we shall see. You know, that's not proven yet. You know, just lastly, we talked about, you know, the trends here in the SPX, and, you know, you have, you know, still a lot of navigation here, okay? What we know is that we broke the, you know, the active intermediate trend, which pretty much was right there. Okay, so, and now we're hovering. Some would say this is, you know, a bear flag, right? Makes sense. Here is your pole. Here is your flag. In order to get continuation, you got to break below it. You also have like a small ascending low channel in here. So, you know, that's what helped give you some timing mechanisms. This, you know, is big support from October of 2014, which we're above. Here is the August 24th lows, and now we're, you know, seeing what happens here. Okay, a little bottom tail, and we'll see what happens. You know, if you're day trading and you're trading 1 to 3 day time periods, you got to, you know, navigate a little bit. If you're not comfortable, you know, sit in cash. This was your fake breakout to the upside. Who knows if this is a fake breakdown to the downside into support? And I guess we'll know more in the next few sessions. But either way, you know, if you went long versus the morning low when it's calculated, at least you have a plan. If you missed the first long when the spiders went to 192 and it came back to 191.30, you could have been a buyer of that, even though you didn't get the low, but you at least were defined also, and then you had another move. So there are these moves throughout the course of the day. The ranges are bigger. There is more action. I think a lot better than we saw in the first 7 months when, you know, the range was lethargic. There was absolutely no volume and no one cared about the market. At least now, after a bit of a corrective phase, there's more eyeballs on it. There's bigger ranges, and there's a lot more opportunity if you read your 3, 5, and 15-minute charts, and if you also get prepared with daily points of reference to help navigate your decisions around. So tomorrow I'll be trading from Short Hills, and then I'm on a 1 o'clock flight to Atlanta. I'm doing a free seminar there for our Atlanta office and for everyone who is a subscriber from T3 Live that wants to come meet me there. Come watch. It's from 9 to 12, and then we're going to have a little barbecue with some drinks. And then we're doing the big one in Miami, but that's not till November. So anyway, we'll see what happens next. There's a lot of action. If you're in, a little bit left over longs from the morning lows, hopefully you have a good mark and you had a good day. So if we are down tomorrow, you could, not give back everything. If you take home a third and we gap up, okay, made some sense. If we gap down, that's why you only have a third. But, if you don't take anything overnight and we're up 15 handles tomorrow, you can't be upset. So got to have a little risk to get some reward, and it is somewhat calculated. And the VWAP, I do believe, for the spiders, I was talking to BP, is like 193.80 or 194. So that could be a bit more of the magnet for the option players. We shall see. With all that said, hopefully you had a good day. You won't see me in the morning call tomorrow, but I will be on Twitter, and then I'll be on a flight. I wish you the best, and also have a great weekend.